Tasha's joining us now. Morning, Tasha.
Good morning. Is it morning? It kind of felt like afternoon already.
Not quite, not unless you're in, I don't know, even East Coast is morning still, I think.
Exactly. All right. Looks like we already have quite a few people to join us. Oh, this is an interesting topic then, huh? Let's go ahead and kick it off. So real brief, there's some names I don't recognize. So let's just do some real brief intros maybe. Tim, I usually kick this off. Why don't you go ahead and introduce yourself first maybe?
Yeah, so my name is Tim Hudson. I am a partner here at the Charity CFO, Tasha's business partner. Been working here for about 3 years. Lead the client services side of our business. I work with like 80 nonprofits across the country every day, helping them solve their problems, answer financial questions, optimize for better transparency in their financial picture, help them better understand what they're doing and make more informed decisions.
Yeah. So I remember asking you, Tim, how many years ago? 3 years ago. I said, what are you gonna do with the rest of your life? And you're like, I don't know. I think I ask you that every month. And you told me my perfect ideal job, if you remember this, I remember you saying this, is that I would really just work for a business and figure out the most efficient ways to do things. At the time, you've worked for large corporate businesses, you work for big four accounting firms, but your just obsession with efficiency. So that's basically what Tim does for our clients. So we make sure the accounting is done well and it's done with optimal efficiency. One of the things is kind of one of our peeves around here is just making easy things harder than they need to be, because right, there's enough hard things out there, especially in the world of nonprofit. Let's keep the easy things easy, so that we have the mental bandwidth really and the staff capacity to tackle the hard things. So thanks for that intro, Tim. And of course, I'm Tasha Anderson. I'm the CEO and founder of the Charity CFO, and collectively, Tim and I have tons and tons of experience working with nonprofits. We only work with nonprofits. We both made the decision to commit our careers working with this sector. It's a little bit of a controversial thing, but I like to think that a lot of professional services have kind of turned their backs on this industry. There's this saying, nonprofits don't have any money, or they're too complex, or I don't want to learn all of their own separate rules. And really, I like to tell people on our website, it says we do accounting for nonprofits, but our real goal is to find a solution for the talent gap, and frankly, introduce more people, accountants and financial minded people, to the idea of working in this space. So we've been around for about 5 years, and we do these calls really for the reason that we know that there is a lot of nonprofits out there that don't have a permanent accountant, whether it's a CPA that they work with regularly or an accountant they have. 80% of nonprofits fall under $250,000 in annual revenue every year. So with that in mind, we wanted to create a platform that allows us to share kind of some main sticking points, topics of conversation that our clients ask us a lot about, or people reach out to us on social media or other channels and ask us questions. And then also, so we're going to do a real brief kind of like conversation around a specific topic, as we like to do. And then we'll open it up. If there's any other burning questions that you all have, please feel free. We just kind of open up into FAQ Friday. So it really is all things. So as I mentioned a little bit, Tim and I have tons of experience in nonprofit accounting, but we also work very, very, very closely with the administrative teams. So we may not have all the answers, but if you have some operational type questions, or just how do I make this easier? We work very closely with fundraising departments, work very closely with, chief operating officers and those sort of things. And I used to work for an organization myself for several years. So any other burning problems that you have that you want to make easier, feel free to ask the question. Maybe we can collectively learn from each other. And here I go. I forgot to launch this over on Facebook, so I'm going to do that. Let's go ahead, Tim, and talk about today. We're going to talk about in-kind revenues and expenses. Tim, while I launch this, you want to kick off that conversation?
Yeah, so in-kind. This is a messy topic in some ways. We get a lot of questions about in-kind. A lot of new clients that come on board that really want to make sure that they understand what that represents and how it's calculated and why it matters and all of that stuff. So I guess the best way to break it down is two types of in-kind expenses, really. There's in-kind services, and I would lump in-kind rent into that category, right? So when you think of, if you've got a landlord, and this is relatively common, that that gives you office space at a lower than market rate or free, that is really considered an in-kind service more so than in-kind goods, which is the other category. Tangible goods, somebody, a lot of social service organizations get, donated diapers, donated supplies, food, whatever it may be, that then goes back out to the community. Those types of things are tangible goods, obviously not services. So those are the two categories. Some things to recognize. The 990, the IRS, I should say more generally, does not care at all about in-kind services. And that, again, that includes in-kind rent. So on your 990, on your tax return filed to the IRS every year, you do not even include any sort of consideration for in-kind services received during the year. You may very well, in fact, you really should track that in your accounting system, because from a financial standpoint, the Financial Accounting Standards Board, or the FASB as we call it in the industry, sets the standards for, they basically make the rules for nonprofit accounting. They say that you can recognize in-kind services, and they say you should recognize in-kind services, in fact. So if you are an organization that gets audited, or you're an organization that presents GAAP basis financial statements or accrual basis financial statements to potential funders or constituents, you should be tracking in-kind services, because on all of those reports, the correct accounting is to account for, it is correct to account for those services. But that for the 990, that's one of the few areas where the IRS and the accounting gods disagree, right? Mm-hmm. So that's the first thing to be aware of. Second thing people always ask about is, how do we value in-kind goods? Like, how do we, like, what does that even really mean from a financial standpoint? And that's a good question. I guess taking a step back, what is if you receive services or goods in a given year, how does that really reflect in financial terms on your financial statements? Well, the way it works is you attribute a market value, and it's inevitably an estimate of some sort, but it's what we believe to be the true market value of the goods we received or the services we were rendered, and we record that as both revenue and an expense on our profit and loss statement. So many organizations, you will see a separate line item that says in-kind revenue, and let's say you received, I don't know, $10,000 worth of pro bono legal services for the year. And you ask your attorney, hey, how much would you have charged me if you actually were working with a for-profit client, or you were charging market rates? And they say, about 10 grand. So you record revenue for $10,000. That's, if we're getting technical, that's a credit on a journal entry, a credit to revenue. And then you record a debit to an expense account. You might record that as in-kind legal services. You might just call it legal services. I mean, however you want to classify that, or just contract services, whatever that might be. But effectively what you've done is you have inflated your profit and loss statement. You have not changed the bottom line. If you had a net gain for the year of $30,000, your net gain has not changed. You got a net loss, same thing, it hasn't changed. But you've increased revenue and you've increased expenses by the same amount. And the reason that's important, again, it doesn't have cash flow impact, doesn't change the cash you have in the bank, it doesn't change your income for the year, but it does show the impact you're making in your community. So it's sort of a way to financially represent the full scope of your operations. And we see this a lot, Tasha, with, again, like social service organizations or organizations that do a lot of, they work with volunteers a lot, or they work with,
food pantry. I have a case of a food pantry that on paper, and this is a common thing for us, right, Tim? Because we inherit clients and they've never recorded in kind at all. And when you add in all of these other in-kind services, goods, rent, their financial position they look like a much bigger organization, I think is what you're saying. And here's a case study of it, right? So many years ago, when I used to be an auditor, we had a food pantry, and the food pantry did not have a system for recording the value of donated food. So y'all, this is a food pantry, that's most of what they do, right? Substantially all of their operations is donated food. And the entire operation, with the exception of they have one paid employee, and that was the executive director. The entire operation, we're talking client intake, warehouse organization, food distribution. I mean, down to the bookkeeper. I mean, everyone was a volunteer. I never saw anything like it. It was incredible. Now, the organization cash in hand was a couple $100,000. So that's the value that they were, their tax return and their financial statements and all that was showing a couple $100,000 in revenue. And of course, they spent all of that money on the purchase of food primarily. And it was a couple $100,000 and they kind of broke even, which most nonprofits do. Now, when we came into the audit, the accounting gods and the IRS say that goods, physical things, they don't really differentiate what things. We talk a little bit more about that. Like Tasha, if somebody gives me literally a pile of trash, I'm supposed to value that. We can talk about that in a little bit. But the value of goods in this case was their programming. When we added that in and we had to create a system for valuing it and tracking it, we ended up being something like $2.5 million. Massive. So when you're writing a grant for, let's say the organization is 100,000 and you're asking to write a grant of $50,000 and a donor says, you're asking me to put a lot of skin in the game as a percentage of your overall organizational budget. I'm not prepared to fund 50% of your operations. 50,000 out of a $2.5 million organization says to the donor, this organization has a tremendous amount of community support. Maybe this is worth considering. And that's how significant the impact is. So now some of you all might want to talk about, and we could get in technically if you want to talk about how to record those things, but Tim, let's talk a little bit about some of the examples. I know you've done a lot of work on this and it's been a little bit since I have, and I'll give an example of the food pantry, how we came up with the system, because I think that's what a lot of people get really overwhelmed in terms of determining how to create the process for valuing things, right? So if you're an organization, for example, the food pantry, it seems very daunting and overwhelming, but it's actually a little bit simpler, I think, when you have a consistent stream of similar type items and you can come with general prices or cost for each one of those items. So in the food pantry place, what we decided, we wanted to take a very conservative price point, right? So they have canned foods, boxed foods, prepared dinners, and we came up with basically 10 natural categories of food, right? Then what the executive director did is he went to Aldi's or some sort of discount food store, right? So let's not go to Deerberg's or Whole Foods or something like that. We're going to go with a really conservative price point, and we're going to say on average, a canned food based on these prices are 89 cents or something like this. On average, a can of pasta or a box of pasta or prepared foods or whatever is $1.50 or something like this. So they actually had to count as you would if you purchased inventory. This is your inventory, right? And you have to account for those things as they come in the door. You have to assess a value. Again, we're not going to say, well, macaroni and cheese is $1.25 and hamburger helper is $1.50. Like, try to come up with broad enough categories if you're talking a huge volume of donated goods. Where things get a little bit more challenging, if you're a social service organization and you get tons and tons of very random miscellaneous things, we could talk about that. But another example for, we have a lot of early childhood centers that we've worked with over the years, and they might have diapers. We're just going to associate a price point, maybe like a sale price or like the generic brand of diapers to each pack of diapers or something. Maybe we'll differentiate it based on size. Obviously, a huge box of Costco diapers is different than a small pack of 20 diapers or something like that. So really coming up with a system. And I know, Tim, you've worked with several of our clients to start developing a system. And we do have some clients that get, Tasha, sometimes we get blankets and sometimes we get clothes and sometimes we get personal hygiene items and sometimes we get all of these things because we work with support agencies that put care baskets together. We have homeless shelters, right? A number of different organizations. So Tim, if you want to talk a little bit more of the case studies for like some of the valuation systems you put together and the methodology behind them, because I think that's the area where people get really overwhelmed. Like, I don't even know how to get this thing started.
Yeah. Well, let me address first services in kind. Usually those are usually easy, right? Usually you can work with whoever is providing in-kind services and because usually they're professionals in their industry. Maybe it's an attorney or a CPA or a whoever it may be, grant writer, someone that's doing some work for you for free. or at a discount. And all you need to do is ask them, hey, can you just send me an invoice for what you would have charged if this was a normal arrangement? And they'll just send you something. And then that's the value you assign to the work that's being done. So that's an easy situation.
Rent same way. Yeah.
Yeah, rent same way. Usually your landlord will know how much their space can rent for because they're in the industry. Now with goods, that's where things get tough. And that's where really you want to systematize the process as much as possible. The goal is not perfection. You're not going to assign, you're not going to have an appraiser come in and review every blanket that you receive and look for holes and look for whatever to make sure that it's, valued appropriately. You're just going to sort of determine, okay, really what you want to start with, like Tasha said, you want to start with a list. This is maybe the top 15 major categories of goods that we receive, whether it's toilet paper, diapers, certain types of clothing, blankets, food, whatever it is, canned food versus boxed food. You can kind of separate into major categories of what you typically receive. And then sort of do an analysis of, all right, how much on an average would, for example, a can of food cost? If I went to the grocery store, somewhere between, I don't know, I honestly don't know, 79 cents and, $1.50. I don't know, something like that. Let's just throw that out there. Do a little bit of analysis. Okay, somewhere in that range. And then generally just kind of, you can either pick an average or you can kind of err on the side. What I like to do, err on the low side. You want to sort of estimate conservatively. You don't want to be accused of overestimating your in-kind goods. If anything, you'd rather be accused of erring on the conservative side and maybe underestimating because you are getting used things and maybe sometimes the cans are expired or whatever. Maybe it's not really something that can be used or distributed. And in those cases, that gets weeded out. So maybe err on the low side and say, okay, let's just say 99 cents. So every can of food that we receive, I don't care if it's green beans or, what canned tuna or whatever it is, we're just going to assign all of that to a value of 99 cents. Put that into your policy manual, put that into your, spreadsheet or whatever you're using, and make that the policy moving forward. And if you do that for every major category and stick with it, usually you're justified in what you're doing. If you're scheduled for an audit or you have an independent CPA come in and look at your books, they may question, the value of certain things. But as long as you can show them, yeah, we have a system where we consistently record blankets at $5. We consistently record cans of food at 99 cents. Whatever it is, you have those values assigned and you have some sort of explanation for where you receive those values. We had people go to different stores and look at prices and come up with a range. And then we estimated based on the average or the low side or whatever. But the goal is not, the goal is to show that you have a decent process. The goal is to show that you've thought through it, I guess is what I'm trying to say, and that you've applied the process consistently. So there's no hard and fast, central database. Sometimes I get that question where clients are like, how much is a rug worth? Is there some database that we can go to that just use that value? Not really. I wish there was, it'd be nice, but we get to create the database. We have that flexibility to sort of make that determination based on our analysis of the facts and circumstances. The other thing I'll say is, depending on the type of organization you are, there may be some random things that come in, maybe once or twice a year that, you rarely have to work with, you rarely have to deal with. They don't fall into a nice practical category. I've seen organizations handle those things differently. A lot of times what I'll say is if the value of those types of random things are immaterial, not significant, it's probably not worth having someone come in and make an estimate every time you receive something like that. If you're able to capture, I'd say 95% of what you normally receive in a list of 10 to 15 basic categories, stick with that. And then the 5% that trickles in that doesn't neatly fall into a category, just don't even consider it. Don't even assign a value to it. I'm always a big fan of, you don't want to spend more time, energy, and money, appraising something or accounting for something than it's actually worth itself, So, if you're normally a food pantry and occasionally you'll get paper plates, once or twice a year, don't even worry about accounting for the paper plates. It's just not worth anybody's time. I don't know. Am I missing something there, Tasha? Is there
No, I don't think so, but I'm hypothesizing a couple more questions, and then we've got a question in the queue. A couple more things that I want to point out that maybe some of you all are dealing with. Sometimes there is a disconnect between, okay, so here's a scenario that I'm picturing, okay? Tasha, that's all great to come up with a system. I am an early childhood center. I do get a lot of diapers, wipes, and lots of things, and onesies and those sort of things that people donate. But the donor tells me that they paid $300 for it, and they want a donor acknowledgement letter that says something, thank you. And I have a system that says that it's actually only going to be valued at $50. What do I do? So first things first, you do not write in writing the value that the donor stated. You just say thank you for, and then outline whatever it is they gave. It is the donor's problem. It is the donor's responsibility to substantiate that gift with their own receipts and provide to their tax preparer. That is not your responsibility. Do not make it your responsibility. And I understand where you might be in conflict in your donor database. You might want to mention, Jane Smith said she donated $300 worth of stuff, but we in our accounting for it might value it at 50, right? I would still want, if I get a large volume of this stuff, I don't necessarily want to deviate from my system. I don't have to tell them, thank you for your $300 gift that I'm only going to value at 50. I probably wouldn't share that with them, but I still want to stick with my methodology because consistency is key, right? So that's first thing that I think people might have some concerns. Like, now, if you get a bunch of random things and there is no system, I tend to say to the donor, to make it easier for yourself, do you have a receipt for that we could look at what the value was, because that's what they paid for. And oftentimes donors will provide that. So if you do have a written receipt and you don't have a structure in place or a methodology in place, you can use that actual sale price. But if you just take somebody's word for it, or even if they have a receipt, but you've already defined a separate methodology, I would still stick with the consistent methodology that you have, because I recognize that, like I said, if somebody went and spent, $600 for turkeys for Thanksgiving and they got organic, free range turkeys from Whole Foods, and that's amazing, and they spent $600, but you said, hey, we're going to value turkeys based on, what Aldi's or Shop and Save or something values it, which is, worth $200, then let's just stick with the methodology. So I think that's the first thing. And then to piggyback off of what you were saying, Tim, let's talk about material items. So I used to deal with this a lot when I was a CFO. You all know those donors that feel very good about giving us the things of theirs, furniture, stuff out of their house. And you all know most of that stuff is not stuff that you want to use, can use, or would be a little embarrassed to try to give away even. Some of that stuff ends up in the trash, or you accept it really because it's part of donor relationship management. Let's just be honest here. So what I used to do and how I would get away with this with my auditors, they would say, well, Tasha, you have documented in the donor database that you got some donated furniture. And I would say, yes, like there's this one donor that gave us this dining room set that they valued at like several $1,000s, right? And this couch is like a really ornate, like beautiful couch. And here's the reality. If people donate to a charitable organization, they have an appraised value for their goods, right? Appraised value doesn't necessarily mean there's a market for it, but okay, I don't know all these things. I'm not a professional appraiser. What I do know is there was a strategic plan for that donor to give us this really incredibly expensive furniture, right? Because they got a charitable deduction write-off for it, which is probably more than what they realized they would have gotten on the market if they tried to resell it, right? And they made very clear, do not sell this furniture for 2 years because there's some reversal of tax benefits that happen. I don't want to get too much into the weeds. So anyway, okay. All right, we won't give it away. We won't sell it. We won't do anything. Okay. So of course, the auditors are like, where's this, $10,000 worth of furniture? I go, yeah, that's not worth 10 grand. Okay. And they're like, but it is. You have to record that on your books and depreciate. And I said, here's my problem with your methodology. If I book this furniture at $10,000, I have to book, that's considered material, not to get too much into the accounting speak. It means it goes on my books as an asset and it depreciates over time. And I have to absorb the cost of this depreciation, likely as a general and administrative expense, because it's just like sitting here in our office, right? It's not programmatic, which means my expenses every year for G&A are going to go up for the next like 7 years for this furniture we don't even want to begin with. We don't even want it. We don't even have a need for it, right? So what I made the argument was I got up on Craigslist and I'm like, what is an average? The fact that this is a designer table from, I don't even know, our house or wherever, I don't even know. I don't care. Like, we're still going to use it as a conference table regardless. So I just like got on Craigslist and I looked at like 6 different examples of like an 8-person dining room table and what's the cost. And it was like, oh, $600. I go, you can't even give used furniture away, right? Hardly. That's why they gave it to us. So anyway, that's how I got around it. And finally the auditor's like, okay, you got a good point here. So that's where you have to be really careful about just accepting whatever the donor says, and thinking about the long-term consequences. So talk to your CPA and see what kind of long-term consequences that is, and have some sort of policies in place. And that's where it's important that if you already have some sort of structure in place, especially if you have tendencies to get donated office furniture or donated things like that, like Tim was saying, if it's insignificant, you may not even necessarily need or want to track it. But in order to get by with your auditors, in order to not track it, you have to essentially prove that it is in fact insignificant. 99.9% of the time, it will probably never come on their radar that you received, a used desk that nobody would otherwise take, so they gave it to you. It just so happened, like I said, I inherited a donated designer table and some incredibly expensive couch, of which, we didn't use it in any other way than what we used all of our other donated couches. So from our perspective, it didn't matter that it was designer. So I think there's another question here, Tim. It says, if you have a board member and have an expertise, so let's say, for example, an attorney on your board, and they give you some legal advice, is that considered an in-kind service? I'll give my opinion first. Here's how I would probably approach it. If it is an individual and they're just giving some general counsel and their opinions, in my opinion, and maybe there's some rules, Tim, you know better than me, but in my opinion, that's they're on the board generally because of their expertise. And if they're lending their expertise, I wouldn't necessarily consider that an in-kind, because that's kind of the assumption in the role of that person on the board. However, say they are one member of a large firm and the firm does a pro bono project for you, right? May not necessarily be them, but through his or her connections, they've been able to secure you some pro bono work. That work from the firm, I would definitely record as in-kind service. What do you think, Tim?
Yeah, there's a lot of rules around this, and it sort of goes back to a broader question of how do you determine when someone is just a general volunteer or when they're actually doing pro bono work that's eligible for in-kind. So technically, a volunteer is not in kind. We would all love to be able to just assign a value, $10 an hour for everybody that does volunteer work for us and pretend like that's in kind revenue. Unfortunately, it's not usually. Generally, there are 2 factors that are examined, and I'm oversimplifying quite a bit here. The rules are a little complex, but just to oversimplify and get at this covers about 90% of circumstances. You're looking at how qualified is this person for the work that they're doing? In other words, am I hiring an actual attorney to give me legal advice? Or am I hiring, just a general volunteer to, help, draft up some legal documents and check spelling errors and things like that? Am I hiring someone to help me clean the office? Or am I hiring someone to manage a fundraising event, right? Like, what is the nature of the work that they're doing? If they're doing some sort of work that does require, I'm not saying college degree, but some sort of professional training, that's one thing. If you're hiring someone to do something that anybody, any person off the street can learn to do in a really short amount of time, then that's generally not considered pro bono in-kind work. That's considered volunteer hours. Now, even if myself as a CPA comes in and volunteers to, serve as an admin assistant for an organization a couple hours a week. Yes, I'm a trained professional in my field, but I'm not doing anything related to my field in the context of my volunteer efforts. Mm-hmm. So that's really not in kind. That's just volunteer. So you're looking at, is the work being performed related to an actual professional skill that requires more training than just an hour, onboarding session or an hour long, introductory, whatever. So that's factor number one. Are they doing, some sort of work that requires professional skill? And then factor number two is, would the organization have otherwise paid for that if they were not, if they didn't have this volunteer? So that's probably what you'd run into with the board member situation. Maybe they are an attorney, maybe they actually are skilled in the legal world and they are providing advice. But you have to ask yourself, if we didn't have this person on our board, would we have paid for an attorney to provide that same advice? In some cases, yes. So, an example I've run into before is IRS disputes where there was some issue that came up, failure to pay payroll taxes, for example, and you have to hire an attorney to resolve that issue. Like, there's basically no option. Fortunately, they were able to find a lawyer that did that pro bono. So yeah, that's definitely in kind. But you run into situations all the time where a board member or a friend of the organization happens to be a lawyer and just provides some unsolicited, advice, friendly advice that might be very helpful, but it's not the kind of thing you would have paid for otherwise. And again, if we're following the letter of the rules here, technically that's not in kind. I guess it's worth noting, I've seen the full spectrum. I have seen organizations record even just plain volunteer hours as in kind. I'm not saying that rules aren't violated in some cases. It's not necessarily uncommon, but I'm just telling you as a CPA what the rules are. And obviously they're open to interpretation to some degree, but those are the parameters you look at.
Yeah, a couple follow-up questions as it relates to volunteer time. And I pulled up a quick white paper, and it says contributed services from one of its board members. The board members are expected, as I was kind of saying, to utilize their specialized skills as part of their board. Therefore, they're generally not recognized as a contribution. To your point, Tim, like I said, if you're working on a merger acquisition and that board member so happens to use the firm and the firm does it pro bono, I think that's a separate situation than your attorney. Many boards have attorneys and they want to read all the contracts. And they just, by their curious nature, they want to do that. To your point, Tim, you wouldn't necessarily have paid an attorney to review maybe a simple contract, right? So let's talk about volunteers though, because I think that's where things get really complicated. And let's take a step back on specialized skill, because this is a really, I think, confusing area for people, because how the law defines, we say law like the accounting laws, right? Define specialized skill. They kind of look at someone that's like degreed, highly trained, specialized skill in their area. So some of the examples provided include, I just had this in front of me, what do I do with it? Would be like architects, teachers, lawyers, accountants, bankers, investment advisors, doctors, construction services, and property maintenance, among many others. So where we have many organizations that fall into the camp. Yes, these might be attorneys doing different work. So for example, we have an organization that's a CASA, right? Court appointed special advocate. Their entire operation is volunteer. They all have numerous different professions, right, during the day. Probably none of their professions relate to their volunteer role. Their volunteer role cannot be counted from a financial metric standpoint. You can certainly disclose in your annual report. You can highlight it in your 990 under program achievements. You can't quantify it in a way that, there's a dollar amount associated with it, because it's not considered specialized, like you were saying, Tim, with respect to the role that they are playing. And that's really difficult. Think about, all of these different organizations that the food pantry, for example, they had all types of people from answering phones, doing intake, food pantry, management, the logistics of it all, food distribution. None of that time was able to be captured financially. The only services, graphic designers, website designers, anybody specialized in that way that's actually doing a work for you that you would have likely paid for otherwise, right? So some people might say, well, Tasha, so here's an example where it says, Barbara says, our organization works with volunteer mediators. Should we consider this as an in-kind service? Maybe, but here's where things get sticky, right? So this food pantry, Tasha, if I didn't have an intake coordinator, I wouldn't be able to run the program. I agree, but these people aren't considered specialized according to the law. Don't shoot the messenger. I'm just saying what they say, right? So that's where things get a little frustrating for many nonprofits because they have to go through and decide what's considered specialized. Now, if this volunteer mediator is an attorney, maybe, yeah, it's very possible, right? So that I probably need a little bit more information, Barbara, to kind of talk about that, but that might be a different situation. But volunteer time, like for example, galas. We have a question here about galas. You know, what about all the volunteers that put together the entire gala? It's a massive, overwhelming process, right? To pull off a huge event like that. Unfortunately, no. Now, the 990 does ask the number of volunteers, so you do get to share that information with the community, but we just can't put a dollar amount associated with it, unfortunately. Unfortunately.
And again, on the 990, you're not putting any services, even things that follow that, even things that meet the skill standard and the professional standard we're referring to, and the two standards I referred to. Even if they qualify from a financial perspective, you still don't put them on the 990.
Right.
You can put them on in qualitative terms on part 3 on the program service accomplishments, but that's all you can do. It's a lot of weird, and again, if I was writing the law, I probably wouldn't have written it this way, to full disclosure. I do think there's a little bit of an arbitrary nature to what does and what doesn't count, but this is the way it's written, and it's been this way for decades, as far as I know.
A couple other follow-up questions, and just to mention too, I know many of you all might have people that do different improvements. There is a little caveat too, that not just specialized skill, but services that create or enhance assets. Think about buildings, materials, supplies, otherwise, that are not financial in nature. So that's where like the construction, any sort of contractors in that sense, you could certainly recognize the in-kind service as it relates to that. I think similar to the same topic, and then we'll go back to the conversation about donated goods for auction items. There's another question. Our executive director is a volunteer because we cannot afford to pay her yet, but will eventually, should her hours be recorded as in-kind services? I have seen and agree that it should be. And other times I've seen where an executive director might only take a salary of $20,000, but we know the market rate for that person's role was maybe $75,000. So $25,000 salary, pick up the other $50,000 as in kind. Because again, my goal for our clients is always paint the picture of what this operation would cost if nothing was donated. If we had to raise the dollars to keep everything going as it is right now financially, what does that look like, right? So if the ED stepped away and you had to replace it, you would either fail to continue operating or have to do fundraising in order to get that person replaced. So Tim, I don't know if you disagree with that, but that's the way I've handled executive director pay.
Yeah, you got to be careful on that. I think you'll be subject to a lot of scrutiny if you're too aggressive in your valuation of ED time. I will say it's not necessarily very common to record, even if you got an ED making under market wages, I typically don't see a in-kind to kind of bridge that gap. I'm not saying it's not justifiable, but don't pretend like your ED is worth 150 grand a year if you're paying them 50. That's probably a stretch.
Yeah, definitely. Again, like Tim had mentioned this in the beginning, this is all an estimate.
Yeah,
it's an estimate, and really where it matters, because again, in-kind services, the IRS does not care about. So that's where you're going to have a difference between your books and your tax return. Okay, the IRS doesn't care about rent; they don't care about services, right? But where it does matter for you, if you go through a financial statement audit or a review or any other what they call attestation services, the CPA firm will give you a nice letter that bullets out like 50 different things. I promise this, I promise that, I promise I didn't lie, I promise I didn't overinflate, and I promise that all of my management estimates, in kind being one of them, is reasonable and that I'm not misleading anybody in any way. So that's kind of where you put your signature down, like, hey, I've been as conservative as I can be. Just kind of keep that in mind. It's always, I think we've mentioned a few times, better to be more conservative than aggressive in these sorts of things. All right, so we're gonna go back to the volunteer time. What about items donated for gala auction? All right, Tim, you want to talk about that one?
Yeah, that falls under the same category as any other donated goods. So usually the nature of auction items, it's usually pretty easy to determine the value. You can usually work with the donor to figure out, hey, what'd you pay for this? What's the market value of, if we're talking tickets to a event of some sort, usually that's easily appraisable. If you're talking about, I don't know, whatever we're talking about, usually those things are relatively easily appraisable. You just need to figure out what that market value is and follow the same guidelines that Tasha and I talked about earlier, as far as don't tell the donor what it's worth. Don't put that in your donor letter. The donor can write that in. They can worry about that for their personal taxes. We will worry about, the valuation for purposes of our financials. Those two numbers don't have to match. They're separate things entirely. But yeah, you can appraise those and put those on both your 990 and your financial statements.
Let's talk about one thing though, because this is where it gets a little complicated. So you can't appraise the goods and value the goods and enter them as revenue and count the revenue associated with selling them in an auction, right? There's a weird little distinction there.
Yeah.
Do you know what I'm saying, Tim? So you have to choose either or. So some people are like, but I want to show the value of the goods and I want to do all these things. I'm like, yes, but you're not keeping the good. You're giving that away in exchange for a donation. So you can do all of the tedious tracking and distribution of the in-kind goods you receive. And you could recognize that as, hey, I received it in, I'm going to expense it out. And it's lots and lots of tracking. Or more practically and more commonly practiced, people keep a total, like an inventory of their gala items. And then usually with an auction software or something, you load up like, these are the baskets or these are the items, and then you have a dollar amount associated. And then you can see like after the auction, what they actually go for. And then it's that value, the end value, because that's really the market value. It's what you got for it. So if somebody says, hey, I'm going to give you this, baseball tickets for worth $100 and you only sold them for 50, then you had $100 in your records. Hey, we recognize $100 worth of revenue because the donor said they're worth $100. Well, they're actually worth 50 because that's what you actually sold them for. So almost always I've seen nonprofits wait until the end of the gala to actually associate a financial dollar amount to the goods that they got. And usually it's just in a summarized amount. You can keep track of them individually through some sort of, you certainly do a spreadsheet or something like that, but more sophisticated, you're going to have an account, an auction software or something like that. So I just want to be clear, you can't double count.
Right.
Yeah, baseball tickets for donor says $100. You don't get to record the $100 and then the extra $50 that you got from the gala. That's not the way it works. You got to choose one, and it has to be the lowest value. Not the lowest value. It has to match with the dollars that actually came in, right? For that good. So it's not necessarily the lowest value. So like I said, what we've seen, people acknowledge the gifts of the goods through their fundraising software, through their development office. But at the end of the day, what actually goes into the financial system is the dollars they received in exchange for those auction items, if that makes sense. So that is how it's usually done. I've seen. Tim, you can, I don't know.
Yeah, you're 100% right. You're 100% right. Ignore what I said.
No, I love that. I love that. Keep that going. No, I'm kidding. No, it's funny because I used to have that question pop up all the time when I used to be the CFO of a nonprofit. And I had to pour through all the regs and figure out like, well, that makes sense. But, and then I realized, oh, I can see where this gets really messy. So you have 100 items with 100 different price points. And then what they actually sell for, y'all know, is never, it's always more or less than what it's, the donor says it's worth. And then you have this whole reconciliation nightmare. But I do think people acknowledge the value that the donor stated in their donor database.
Right.
And that's another interesting point, because I think that that's where people are always like, why doesn't my donor database match up with my financial database? And it's like, well, because it kind of serves two different functions. The accounting is like, what are the rules, the letter of the law, and how do we present that information to those that are holding us accountable? And the fundraising database is really just nothing more than a relationship management database, right? What is the interaction? With the donors, whether it's conversations or campaigns or donations received, those sort of things. It's two different purposes. Apples and oranges. Unfortunately, yeah. And so, or I guess fortunately, I mean, it's good, right? And so people often get frustrated in leadership roles within nonprofits why the two don't match. And those are just some of the reasons why you could have differences. Okay. Doesn't mean that Oh, go ahead, Tim.
I was gonna say, it doesn't mean you can't reconcile the two. You, you just have to kind of be aware of those areas where there are some differences, and those have to be sort of accounted for when you're comparing the two systems.
Absolutely. Okay. Good. We are going to be around for another 15 minutes or so. Anybody else have any questions? And I do have one question for you all. Is there any topics that you would love to have us start our conversations with in the future? Please drop that either in the Facebook group, or I'm actually going to leave that link here for you all to find us in Facebook, or just drop it here in the chat if there's any other topics that you would love for us to cover that have always been kind of a source of confusion for yourself or your board or your staff. And if you all enjoyed this video, we are also loading these videos up on our YouTube channel, as well as you can watch them on replay in the Facebook group as well. So we try to do these pretty frequently, and we'll continue doing so as much as you all enjoy them and get benefit out of it. Okay. Well, we don't have, I think, any other questions in the queue. We can wrap this up a little bit early if there are no other questions or comments. Alrighty.
Everyone enjoy your weekend.
Oh, we got one that just slid in here. Okay. Tim, you might know this one. You've researched this PPP formula. Is Inkind added to revenue for PPP? I would assume.
Yes, I believe you include in-kind goods, but not in-kind services. So you would treat it the same way you would on your 990. That is, I'm 90% sure on that one. I'll see if I can look that up quickly.
Kathy, I would definitely verify with your bank.
Yeah.
So they're the one that's going to be forgiving that, but that's an excellent question.
Yeah, we
I
have.
don't know if I've had that question yet. I'm trying to remember if I have. I don't think I have. Tim's looking.
No, I'm looking. Sorry. Jeopardy music to play. Let's see.
And these applications, everyone that's still on the PPP round 2, the application process is still open. So we did a whole webinar on PPP round 2. I don't know, it's been probably over a month now. You can find that on our YouTube channel and rewatch that for eligibility. And that is, those funds are still available. It's been extended through May 31st. But here's the thing. The banks usually shut down the application portal a few weeks in advance. So please check with your local bank, figure out when they're going to stop taking applications. If you're working on it, do not procrastinate on this. The banks have no mercy. I would definitely try to get it in probably by the end of the first week of May, but I would definitely check with your local bank. Like I said, even though the SBA extension is through May 31st, that does not mean the banks will take your application all the way up until May 31st. There's just no way for them to process through all the applications and get it to the SBA by the 31st. So the 31st is the SBA deadline, not your bank deadline. So make sure you double check with them on that. Any luck yet, Tim?
Yeah, I don't know that there's an explicit reference in the SBA guidance about in-kind, but there is explicit reference that, where there is ambiguity, refer to the 990 rules or the tax return rules. The way I've interpreted this is that you would include in-kind goods, but not in-kind services. In other words, whatever revenue you would put on your 990 is the revenue you would include on your PPP2, quarterly revenue test. The one exception to that, of course, is forgiveness from the first PPP. And I think everyone knows this now. Forgiveness from the first PPP is excluded. So anyway, I hope that helps. I think it's probably worth confirming that with your bank. Your bank will tell you if they disagree, but that's how I would interpret that, given the guidance that's been put forth.
Yeah, awesome. Okay, well, it's about time, and I don't think we have any other questions. So we will see you all back on our next webinar. I can't think off the top of my head the topic we chose, but I will certainly drop that in the Facebook group. And for those of you that follow us on our newsletters, if you don't follow us on our newsletters, you can go to our website and subscribe to those. I can drop that here, thecharitycfo.com. But we will send that out very shortly. I can't remember. And we will continue the conversation on the next episode. So we will see you all. Have a great weekend. And that's it. See you next time.
See you guys.
Bye, everyone.